Good afternoon and welcome to our South Carolina Ag Disruptors webinar for today. This is our October edition of the webinar, which is our monthly webinar from the agribusiness team looking at different topics and issues that could have a significant impact on South Carolina producers. So we've got several topics and several speakers for today. We've got Dr. Steve Richards, who's going to continue his series on evaluating different agricultural business ideas. We've got Trey Buckelew, who's going to give us some information about hemp and kind of the status of that. And Scott, Mickey, and myself towards the end will cover some issues and some ideas and things related to tax planning as we get towards the end of the year here. So just some things to be aware of from that standpoint. So this is a monthly webinar, so we'll have two more series for this year. We'll have November and December. We do sort of have a wide range of topics and a wide range of speakers, and we do record the webinars and upload those to our YouTube channel. So if you'd like to go back and review anything or see some of the past webinars, you can do that as well. But with that, we'll pretty much go ahead and get started. So I'll turn it over to you, Steve, and you're welcome to share your screen when you're ready.
Great, thanks, Kevin. So today I'd like to talk about ag disruptor or not, cultivated mushrooms. And to be honest, I've always wanted to look into this because I always wanted to know why certain areas grew more than others, and you'll see where that is in a minute. But mushrooms have been around for a very long time. In fact, the first historical record of eating mushrooms was in ancient Egypt. There may have been eating before then, but we didn't have historical records perhaps. But the mushrooms were reserved for pharaohs only, so they were the food of the kings. And historically, most mushrooms are harvested wild. Mushroom cultivation started pretty much, as far as I can tell, as far as I could dig today, in caves in Europe between 1643 and 1715, but always traditionally a high-value product, perhaps even a food of kings then as well. What about cultivation in the United States? Well, in 1935, William Swain, he was a greenhouse operator in Chester County, Pennsylvania. He was bugging him that he had all this wasted space underneath his greenhouse growing benches. So he thought, I'll put some manure under there and some other things. I'm going to grow mushrooms underneath the flowers that I'm growing in the greenhouse. And all these waste products, and I thought it was going to be dairy manure, but no, it's actually horse manure. The Amish farms in Lancaster County, the spent cocoa hulls from Hershey's, where the chocolate's made, were all products that he could buy and make substrate from. So all these waste products are located nearby. So I'll go and I'll talk more about mushroom farming, and I'll kind of tell you more about Pennsylvania at the end. But let's look at mushroom farming as an agricultural disruptor, Pennsylvania or no. So it's kind of historic. Some things can be disruptors early in their history, and then once everybody adopts them, then not so much so, right? And that's the story of agriculture. Technical ranking. Is this an easy technology? To be honest, it's not that easy of a technology, but I'm going to knock it a point off in the management and staffing part. But in terms of the technology existing, this technology exists. It's a proven technology. There's many, many mushroom farms and farmers in the United States that are growing mushrooms. So I said it's a 5. Marketing. Does this market exist for cultivated mushrooms? Yes, the market exists, and plenty of marketing data to support it. Now, it's not as well documented market as maybe some agricultural products that National Ag Statistics Services tracks, but it's certainly something you can find out about, unlike some other products that are niche products and don't have documented demand. What about economic and financial? This I had between 3 and a 4, but if you're already existing and have the infrastructure, you pretty much have a solid business plan. Now, if you had to build that from scratch, it's a little bit different story, but splitting the difference, I ended up on a 4 on that. Management and staffing, I gave that a 4 because it's a little bit tricky. You're dealing with spores, you're not dealing with seeds, you're dealing with in controlled environments indoors, you're dealing with certain conditions that you have to make sure exist to make those mushrooms sprout, or I'm sure I'm using the wrong term, but they look like sprouts to me. So is this an ag disruptor or not? I give it an 18 out of 20, so it's possible. And in fact, I would say that the Pennsylvania mushroom industry is and was an agricultural disruptor. There are high barriers to entry. You had to build an indoor growing facility. They were high technology challenges at first that they overcame. And how they overcame it was because they basically had this concentration of industry players in that one county, and they talked and shared ideas. They created their own, basically their own extension service for mushroom growing. And so that really helped them. I call it an ag tech corridor. They had a high value product that had consumer demand. Waste products were in abundance nearby. And now today, Chester County, Pennsylvania grows 50 to 65% of all the mushrooms in the United States. Now, what about mushroom farming in South Carolina? Is it an ag disruptor or not? The indoor farming techniques are transferable. The technology of how to grow is transferable. Demand exists, especially for more exotic mushrooms. Now, the consolidation of the industry for grocery store mushrooms like button mushrooms and portobello mushrooms has been under pressure from large industry players, but still there's still demand. Container farming has potential. You don't have to build a building. You can do it inside a container. And I think, instead of, trying to recreate Chester County in one county in South Carolina, maybe we do a cooperative for mushroom growers that we can share ideas, share costs and substrates, and market South Carolina grown mushrooms together. So I would say it's kind of split. Pennsylvania wasn't an agricultural disruptor. South Carolina has potential for some good growth in that industry. And that's it for mushrooms. And if you have ideas on what you'd like to see in terms of evaluating business ideas, please let Scott or Kevin know. Thank you very much.
All right. Yeah. Thank you, Steve. It does seem like there's been some maybe increased interest in this area. I've seen a couple of questions and stuff pop up recently and some workshops and things too. So, but as Steve said, if you got some other things that you think would be interesting to take a look at, just submit those and we can cover them in a future webinar. With that, we'll go ahead and move to Trey, who's going to cover some information related to hemp.
Thank you, Kevin. Share this. Is that on the presenter view or is it looking right?
Yeah, it just switched over.
All right, good deal. I'm Trey Buckelew. I'm housed here at Santo Rec, and I'm going to give you a little hemp update. So I want to give a few acknowledgments first to everybody that helped with the hemp pilot program and basically helped us understand everything about industrial hemp in South Carolina. We're still learning. It's a new industry, but a lot of information is coming through. So in 2018, the Farm Bill allowed industrial hemp to be farmed. Before, you had to be a part of a pilot program and be paired with a researcher. So this Farm Bill actually removed the Schedule I status. It removed all the requirements to grow with research partners, extension, stuff like that. And it opens hemp to banking and crop insurance possibilities. Even though some banks are still kind of hesitant, it's still available. And it opened it up for interstate commerce, which before, if you tried to sell across a state that was illegal, it could be seized and stuff like that. And so since 2018, when South Carolina's been involved, the overall value of hemp for a nation has gone close to $850 million. And as you see, most of it's out in the open. It's not grown yet as a majority in greenhouses or hoop houses or anything like that, but that market value is slowly but surely increasing. I thought to add this, I thought it was a pretty cool graphic by the USDA. So new farmers are entering the hemp market. They're not traditional farmers, and a lot of the operations that are actually in hemp, a majority have been operating for less than 5 years, which means there's some new blood with an older industry, which could be a good thing. So this is actual planted acres grown in the open. As you can see, South Carolina had 320 acres. Most of our growers do a small plot solely because it's so expensive to grow hemp. And I'll show some of that through our budgets in a bit. But as you can see, the largest producing state is Colorado. Our neighboring state, North Carolina, they're a little bit ahead of the game. So it causes some issues for us in the market. So South Carolina was able to harvest out of those 320 acres, about 180. Some when you harvest around hurricane season, so some farmers dealt with that. Some farmers had hemp actually go hot, which means it's above that 0.3% total THC. And when that happens, there's no crop insurance that can save you. It just has to be dissed up and destroyed. I added this graphic as well. This is also from the USDA. It shows floral production in pounds under protection, which means a greenhouse, hoop house, stuff like that. And as you see, South Carolina is a little bit more competitive here. We have 3,200 pounds, a little bit over that. And North Carolina is at 16,000. But as you see, the biggest state, which was Colorado, that was grown in the open earlier, only has 17,000. So we actually have an opportunity to grow here in this sector. South Carolina has lower labor costs than Colorado. It also has a little bit lower energy costs. So if we tried to grow it indoors, if we could show some profitability, that might be a viable option. So here's another little snippet from a few different graphics from USDA. So total production of hemp was 54,000 acres. They value that at $712 million. And if you see underneath that, the floral hemp grown in the open, the reason that's different is they're more specialized here. So they have to hand harvest everything. They have to hand trim everything. And the floral material actually brings a little bit more money per percentage point of CBD per pound. Some farmers in South Carolina are getting as little as, $8 to $10, but they're also throwing the hemp through a silage chopper. They're not really cutting it by hand. They're not really focusing on the floral material. The second two tables I actually highlighted for the price. So you can see the price for floral hemp that's grown in the open is $39.60. So it's almost $40. That's about a 4-time increase from what a lot of our farmers are getting, because right now we're growing a lower quality product. But if you see that the next one underneath that, the actual price for floral hemp grown under protection is around $251. And they're able to contract it a little bit more. It's a higher quality product, and the price reflects. It also shows on that third table at the bottom, the harvested not sold pounds is also higher, and that is because they do demand a higher price. So it's not necessarily going direct into processing like some of the open hemp would be for crude CBD or isolate or distillate. They're actually selling that floral hemp in the open market, which in South Carolina technically is still illegal. So our farmers, can sell in North Carolina, can sell in Tennessee on the open floral market, but our legislation hasn't actually passed the ability for us to do that right now. So let's focus a little bit on South Carolina. We started hemp farming in 2018 with a pilot program. We had 20 growers over 15 counties, and there was an acreage cap of 20 acres per farmer, so a max state acreage of 400 acres. And if you fast forward to today, we have 190 growers. We're in every county but 3, and there's no acreage limit. Now, the 190 growers doesn't necessarily mean that 190 individual farmers are actually going to grow a lot of hemp if they grow it all. A lot of farmers, they have hemp still in storage, so they try to get either a hemp permit or a hemp storage permit so they follow the law and they don't have to destroy that hemp that they still have in their possession. But a majority of our growers are very small acreage. I think the largest that a few of the county agents have seen is about a 40-acre plot. It's just really expensive to grow. It's kind of difficult to sell. And so a lot of the farmers still have all that hemp in storage. So this is data from the FSA crop acreage report. So the farmers are required by law to report their acreage to FSA and report it to SCDA. And so South Carolina still has a majority of acreage for hemp in CBD production. People talk about fiber or grain. Some of the farmers have actually tried to get into the seed program to kind of have some strains for South Carolina, or, get certified, because there's not really anybody that sells certified seed. I think there's one farm that is allowed to sell quote unquote certified feminized seed. And then there's another one that sells certified seed, but there's no guarantee of if it's feminized or not. So South Carolina has to step it up a little bit in order to get some of that feminized seed, which is what you need in CBD production. There are no presence of male plants. So that adds a little bit extra in labor as well to kind of cull those male plants. So this is just a little bit brief history of when the actual farming permit and the other permits are actually released. So for the past 2 years, at least, it's opened on January 1 and it's due at the end of February. In 2020, it was a little bit of a weird year. They were still accepting some in-person applications, and with COVID and everything else happening in the middle of March, it got kind of difficult. So they extended that date to March 31st. But the SCDA and we project it to be open for next year, starting January 1 and with a due date of February 28th. And all of the permits are through online processes. It's not, you can't fill out a form and mail it in anymore. You have to do all that online. And so here's a few of those costs. So if you just want to be a hemp farmer, it's a $100 application fee that's non-refundable, and it's a $500 fee for the permit itself. An FSA farm number is required. You're required to do a background check and make sure you don't have any felonies or any issues, criminal record. If you want to be a processor, there's that $100 non-refundable application fee, and then a $1,500 processing permit. They also do a background check and stuff of the main business owner. And then for hemp handler permits, that's where some of our farmers fall into play now. Some of them might not necessarily be getting a farming permit, but because they still have hemp in their possession, they have to have that permit to handle it. And if you have, multiple entities of your farm, if you want to truck your own hemp, if you have a separate facility that's not associated with the farm itself, sometimes you do have to have some of those permits. And if there's any questions about that, SCDA will give you a breakdown of what they think you need, but definitely handle that before the application opens, because there's a very small window. They're getting contacted a lot, especially at the turn of the year. So try to come up with some kind of comprehensive plan before you try to figure out what permit you need. So in South Carolina, crop insurance is available. You're not going to be able to get multi-peril crop insurance. Some states in the country are allowed to get that, actually 21 states in select counties. It's usually based on acreage. I have some of those states listed, but as you can see, North Carolina, that's really close to us, they do fall under this multi-peril crop insurance, which kind of helps a little bit of their growers. This does not help if your hemp goes hot. If it tests above that 0.3 at any point, no crop insurance is going to help you. It just has to be destroyed, which is pretty unfortunate. South Carolina farmers can actually apply for the whole farm revenue protection. This provides coverage for all revenue, for all commodities produced on the farm, total insured revenue of $8.5 million. There's also a new type of whole farm revenue protection policy. It's kind of blanketed in. It's for micro farms. So some of our smaller acreage hemp farmers might be able to get this and qualify for this, but it only covers up to $100,000 in approved revenue. So that might be, kind of difficult, seeing that hemp's very pricey per acre. So that $100,000 mark, you might be lucky if it covers 10 acres. So if you're doing a small amount, that'd be great. If you're trying to be one of the bigger producers with the 40 acreage, 40 acreage, you might need the whole farm revenue protection. And then you can also get NAP, the non-insured crop disaster program. And it covers it for basically all sector of hemp, the fiber, the grain, the seed, CBD. In some cases, it might cover some clones, but a lot of the time that's in a greenhouse. So I don't know, unless, a hurricane or a tornado comes through, if that would be the right avenue for growers that are trying to clone plants or grow seedlings and sell them to the other farmers. And that basic coverage is 50-55. It's available 55% of the average market price for crop losses that exceed 50% of expected production. And that service fee is $325 per crop or $825 per producer per county. And it caps out at $19.50 for farmers with multiple interests. And some of the farmers, they're trying to get vertically integrated and do a whole bunch of things. And that might be the best option to cover you in multiple counties. So hemp production methods for SC. Most of our hemp is grown for CBD, and there's some new chemicals they're trying to isolate in the hemp plant with the same style strains as the CBD strains. CBG is a new chemical they're trying to isolate CBN. Hemp is also, people are trying to push for the hemp fiber to be grown because a lot of reports have come out about the industrial uses of it. Unfortunately, South Carolina acreage is very low, as well as acreage across the country. So it's kind of a catch-22. Farmers aren't going to necessarily grow a lot of acreage unless they know they can sell it, whereas processors aren't going to necessarily retrofit all their equipment to process hemp if there's not enough acreage to buy. So people are also trying to get in the grain market, but unfortunately right now you can't really add a whole bunch of hemp products to food. It's a little bit of a gray area with the grain, seeing that, humans can consume hemp seed and you can buy it. So just check with local law enforcement, check with your local ag departments, SCDA, maybe even the USDA, and make sure you're following under all the jurisdictions, because you are very liable with hemp. If you make a misstep or something, all of it can be destroyed and their law enforcement can't get involved. And then a few growers, like I said, there's 2 certified growers right now. They're producing or trying to produce certified seed. And, some people are just growing hemp using a mother plant and cloning, and some are, doing a little value added and buying seed and growing them to about a 2-inch seedling and then selling them back to the farmer, which is always a possibility. So the Dr. Nathan Smith and I, we traveled around in the first year in 2018 in the pilot program. We identified 2 real distinct styles that farmers were doing. And a lot of the reason they were using that style, one of the other styles, was because of the machinery they had available on hand. So we noticed some tobacco growers in the low country and some vegetable producers in the PD, as well as other parts of the state. And so the tobacco model is short, smaller rows, only 4 foot, vegetables 5 to 6 foot rows. Both are grown by seed or transplanted. It really just depends on, how much the farmer is trying to grow. It depends on if they have access to certain seed or not. I mean, in some areas you might have access to someone that has a greenhouse that is selling transplants or seedlings, but some of those cases, transplants can be as high as $5 a plant, and seeds are anywhere from 80 cents to $1 for feminized seed. And in some cases, if you buy in bulk for large acres, that cost will be decreased, but it's pretty pricey. In the initial couple years, a lot of the tobacco growers didn't plan on irrigating, but when they realized that high investment costs per acre, they kind of transitioned and started irrigating. Whereas the vegetable producers, they almost always irrigated. They would lay the plastic and then lay drip irrigation underneath it, but they're used to that. They do it for vegetable production. So I'm going to show you first the tobacco model. As you can see, the seed is at 2,300 seed. They're going to have a higher seed count, shorter rows. Also, in both of these budgets, we don't show revenue. The big reason is while you can make money, a lot of your price points are determined by your processor or by whoever is buying wholesale from you, as well as, you could plan and get lending and say, hey, well, Clemson said I can make this much money and your hemp could go hot and you make $0. And then in that case, you can't pay back loans and stuff like that. So with the tobacco model budget, the only big difference between the vegetable model is the machinery. as well as a little bit of labor difference. If you look at the culling and hand weeding labor, it's at 60 hours versus 65 on the vegetable model. And the reason for that is the shorter rows, when the plants actually start to grow out and widen out, it actually creates a canopy for those shorter rows. So you're not having to go in between rows and actually hand weed and stuff, because there's no herbicides legal for hemp. There's no pesticides legal for hemp. There's a few BT soaps and stuff that you can use, but everything else, not only is it illegal to use, the processor's testing for it. So if you agree to contract all your hemp to one processor or a wholesaler, they'll test your hemp and they'll be able to tell you if there's any heavy metals, any pesticides, herbicides, and then they won't buy it, and no one really will. So those were the direct costs. The indirect costs, there's a tractor machinery cost. A lot of people were drying it in like a bulk barn or a warehouse in 21. They're still trying to dry it themselves a little bit. Sometimes it's a little more difficult. And we're gonna have a total cost for that tobacco model at $9,533. And the operating costs that are not included in this budget, that we're updating for the 2022 budget a little bit. Owner and family labor is not counted in several cases. The labor cost was so high as it is that a lot of the time family members would step in and help out because it's a very labor intensive crop. Mostly everything's done by hand. The processing costs aren't included because a lot of the time farmers actually give their hemp to a processor in exchange for crude oil or distillate. So they're almost giving away a little bit of equity in their hemp crop. Crop insurance cost is not included. For the longest time, up until the 2018 Farm Bill, hemp didn't have any kind of insurance. And even now, even though it's available, a lot of people could possibly use it or not. It just really depends on your acreage. It also depends on where you're getting your seed from. If you don't really know your seed provider very well, it doesn't make much sense to pay for insurance the first year you're growing if your hemp seed's going to go hot. You always have to vet everybody in this industry. You have to make sure you know who you're buying your stuff from, because a lot of claims are being thrown around. And there's a lot of snake oil salesmen in this industry right now. The permit fee did increase. It's $500 instead of $200. And then there's a $100 non-refundable application fee as well that will be in the budget. And fertilizer cost and fuel costs are probably double. Inflation, the war in Ukraine, a lot of those things raised a lot of prices. And so we expect those prices to go up. So here's the vegetable model. As you see, there's a 2100 seed, and those are feminized without the presence of males. 6-foot rows. The only huge difference here is, as I said earlier, the culling and hand weeding labor is actually a 5-hour increase because the rows are bigger. The plants don't bud out and widen quick enough to fill that canopy to shade away the weeds in between the rows. So what people have to do, and what they have done, is go in between the rows with a lawnmower. They've hand pulled some weeds. They've basically done everything they can. Go around the field, stuff like that, because they can't spray anything. There's a plastic mulch cost as well. The growers liked it, especially in the hot months. It was easier for the soil itself to take in some of that moisture and not evaporate. Hemp is like a very finicky crop. It likes to be wet, but it doesn't like to be too wet. And so with that drip irrigation, they were able to find, a happy medium with what the hemp really wanted. So we look at, the total cost here at $96.79. And so it's not a huge difference, but there's a lot of places that you could spend more money. You could say, hey, I don't want to grow seed. I want to do transplants. And sometimes that's anywhere from $3 to $5 a transplant. You could do seedlings, which is an added cost. So it all depends on what your plan is, how many acres you have. If you're doing 40 acres, it might be very, very difficult to do your own seedlings. The germination rate might not be good. So you might want to invest in that higher amount. But a lot of farmers are trying to be basically as cheap as possible because the input costs are relatively high. And once again, these operating costs, they don't include owner and family labor, no processing costs, crop insurance. is not in there. Permit fees also increased, as I said before, and those fertilizer prices and fuel prices are going to be higher. So South Carolina hemp, it's really the Wild West still. Delta 8 THC, Delta 10 THC, hemp flower is all being sold in stores all across South Carolina. It's also CBD is also being put in food, which is in South Carolina and federally, that's still illegal, still a gray area. So SLED and other people and the FDA are sending cease and desist letters, SLED's going to some of these shops and shutting people down. And so farmers are trying to sell hemp as any way they can. So the unestablished market is really a barrier for South Carolina growers. The process and the manufacturing is iffy. There's 8 processors this year that are permitted so far. And in the previous years, a lot of the processors, they made claims they couldn't back up. They said they could process as much hemp as you bring, as much biomass as you want. And a lot of the time they were fly by night. They would take hemp and either go bankrupt. And in the previous years, in 2018, you actually had to list your processor before they gave you a permit. So some of the people listed their processor, and before the hemp was even harvested, the processor was bankrupt. And so that caused some issues. There's no real certified seed supply or strains for the region. There's no specific strains for the Southeast. There's no specific strains for South Carolina. A lot of these strains that are being produced come out of the bigger producing areas. Kentucky's, experimenting with some strains, North Carolina, a lot still come out of Colorado, California, some from Canada. There's no label herbicides and pesticides, which means there's going to be an increased cost for labor to go hand weed. And even in some cases, people were going and pulling army worms off their hemp plants because there's no way to really kill them. The soaps help, but it isn't always a sure thing. And there's huge domestic and global competition with Canada increasing their production of hemp, with North Carolina knocking on our door, Georgia starting to get into hemp. It's going to be really tough. South Carolina either needs to update some of their policies and allow farmers to sell floral hemp, because it's already been sold in South Carolina. A lot of the time it's not South Carolina grown, and even if it is, those farmers are facing a huge liability. SLED can come after the farm, law enforcement. If you don't follow the rules of hemp very closely, you could be in some bad situations. And then the final point is there's a lack of research-based information. We're moving fast-paced. A lot of extension personnel all across the country, as well as here in the state, have been doing a lot of research, helping the growers, learning more. We're doing research plots in a lot of our extension research stations. So hopefully in the next few years, we'll know exactly how to grow it. We'll know the best way to get the highest price point, and maybe a better way to control, some of those weeds and some of those pests. So I'm gonna open it up to questions. Does anybody have any kind of questions or anything about hemp at all?
Haven't seen any come through the chat or anything at this point, but certainly, as Trey mentioned about the handful of folks from Clemson that are working in this area, and then of course reach out to Trey and/or Dr. Nathan Smith if you've got additional questions related to what was presented today. But yeah, we do appreciate it, Trey. Seemed like this was a real hot topic a couple years ago, so I thought people might have interest in kind of what the progress and the status has been since that time. So we do appreciate it.
Yes, sir. Thank you. If anybody has any questions, feel free to reach out to me. David DeWitt is our hemp expert right now. So if you can't find his contact info, please reach out. I'll try to help you out in any way I can. Thank you all so much.
All right, and with the remaining time that we have for this afternoon, Scott and myself, we're going to cover a little bit of tax information. We thought that this time of year might be a good time to cover some of this, as we are getting somewhat close to the end of the year, but we might have some time to still make some decisions and maybe have some conversations related to tax planning and change some things maybe if we'd like to for tax management purposes. So I'm Kevin Burkett, Extension Associate with Agribusiness, and joined by Scott Mickey, Extension Associate for Agribusiness. And we should maybe mention a disclaimer of we're only covering this information for educational purposes, and anytime you're touching on something tax or legal related, we would encourage you to reach out to your own trusted advisors and really work through your situation, because a lot of this is facts and circumstances based, and so we can kind of talk about the rules and the provisions in general, but without knowing your exact situation or how it might apply to you, we don't really want to speak in that way, or we're just doing it from an educational perspective to raise some awareness of some of these areas. So we will go ahead and get started. So I always kind of like to mention this. I think people hear it and maybe have seen it before, but and it kind of sets the stage for what we talk about when we're talking about tax management. But these are our income tax brackets, and this is how our income is taxed in a given year. So it depends on your filing status, but for this discussion, I use married filing jointly and surviving spouses as the filing status. But these brackets are produced every year, and it shows the rates at which our income is taxed. And this is for ordinary income, and capital gains have their own system and how that works. But so if somebody said, like, husband and wife, they made $100,000 in a given year, based on this table here, you would say, well, they fell into the 22% tax bracket, which is true. And their next dollar of income, which would be their marginal tax rate, would be taxed at 22%. But the way it works for their total income would be their first dollar up to $20,550 is taxed at 10%. And then $20,551 up to $83,550 would be taxed at 12%. $83,551 up to $100,000, we said, would be taxed at 22%. So it's not that all of their income is taxed at that 22% rate. It's just that's the marginal rate. So their next dollar is taxed at that rate. So if you were to look at total effective rate, say on $100,000, it would be what's the total percent that was paid on that 100,000, and it might be closer to, say, 16 or 17%. I don't know exactly without doing the calculation, and that kind of sets the stage for tax management, because we might set some goals from there. We might say, well, of course, we don't want to jump up into those higher income tax brackets, and so you might say, well, if we can stay, say, in the 12% bracket, or just minimize the amount that goes over into 22 or some of the higher income tax rates, that might be your goal. Because if we're profitable, if we're bringing in income during the year, it's not that we can just pay no taxes each year, but that's just how we start to maybe manage some of that. Also wanted to mention this. So there is a difference in taxable income and what you would call book or economic income. And I think sometimes we get these a little bit confused. And two, from a farm management standpoint, that's why we'd say it's difficult to really evaluate the true profitability of a business based on what would be filed for tax purposes, because there can be timing differences. So for instance, we can recognize something for tax purposes this year, or we may want to recognize it next year. Whereas for book or economic purposes, it may be the opposite of that. As well as there are certain tax codes and provisions that it's completely legal to do this, but you can treat it differently for tax purposes. And you don't have to understand that completely, just kind of keep it in mind as we kind of go through this discussion. So we almost have these conflicting things going on, because in one sense, if we're a business owner, if we're a farm, we want to increase our profitability, right? We want to make money during the year, and our goal is to be profitable. And so for economic or book purposes, we're trying to increase our revenues and or decrease our expenses so that we can increase that profitability. But then on the flip side, for taxes, that's almost the opposite of what we're trying to do, because we want to maybe report lower revenues or defer revenue, or even speed up and increase some of our expenses. So just as a quick example, I think a lot of people have heard of depreciation, and we're not going to touch a lot on it because it is sort of when you talk tax management, that's what you hear a lot about. So most people are probably a little bit familiar. But just to show kind of the differences between the two. So if we bought a $50,000 piece of machinery for economic or book purposes, we might say the machinery will have a useful life of 5 years. And so for book or economic purposes, we would take $10,000 of depreciation over those 5 years of the life of the asset. And for tax purposes, we might take $50,000 because of 179 or bonus depreciation that we're eligible to take through the tax code. And that's fine, and that's completely legal, and that's something that you're allowed to do. And you can see the total amount is still going to be that $50, but for tax purposes, we can treat it differently. And not saying in this scenario that this is the best thing to do, because it does totally depend on your situation. One farm may decide that they'd like to take $30,000 in the first year, and they would take the remaining $20,000 over those next 4 years. So they would take $5,000 of depreciation the years 2 through 5, for instance. But just to show how those differences show up. And again, that's why we don't necessarily evaluate profitability from a tax return, and just why it's good to know about some of these tax provisions and things that can help us manage what we end up as taxable income. So our goals, I mean, certainly it would be nice if we could say, well, we don't want to pay taxes each year, and somehow that were possible. But really the goal is that if we've got income and we are profitable as a business, and of course we hope that is the case, really that we're able to get our income through as cheaply as possible. So that may be utilizing those lower income tax rates and just having good planning for how are we going to handle some of those items. So you might have a goal for this year to minimize income, but then what does that look like, say, over the next 3 years, the next 5 years? Because for that previous example, if you do take all that depreciation in the first year, for instance, that leaves you pretty bare for the following years. So just being aware of kind of what the implications of those things are. I think most people, when you talk about taxes, they just don't want any surprises. So if for some reason something happens during the year, we have to recognize a lot of income and we end up with a rather large tax bill, I think most people would say that's a problem and something went wrong during the year. And this also feeds into our long-term planning. What do we hope to do with the business? What are the tax implications of that? Especially if we get into some of the estate and transition planning, and we start to think about that, what are the tax implications of that? So we just sort of ask the question, do you have a tax preparer and somebody that you really trust having these conversations with? Because you as a farm owner, as a small business owner, your time is taken up by a lot of different things, and it's difficult unless you really have a lot of interest in this area and have the time to spend on it. The tax code can be kind of an expanding beast, and you get into it and realize there's a lot of details, there's a lot of things to know. So we would encourage you to reach out to someone and really get comfortable working with someone throughout the year that can help you with some of this. So related to that, we did want to mention some resources to turn to, and always consider us as a resource. We'll help you as much as we can. But if you'd like to dive further into these areas, we wanted to mention some things too. So ruraltax.org is a very good website. They have a number of shorter articles on there. It's almost like frequently asked questions or some real common scenarios that we see in agriculture. And they're constantly revising those articles. Some of them have become a little dated. I've helped out with a couple of them, but one that was put out earlier this year by Dr. Cushing at the University of Florida is on how to choose a tax professional. And this goes through some things like, what are their credentials? Are they able to represent you before the IRS? You know, what's their stance as far as being more aggressive on tax positions or more conservative? Just some considerations like that, and maybe some questions and things to talk with them about as you're choosing someone to work with. I know the IRS has some issues, has some information on their website as well about this, so I did just want to mention that. And this kind of goes into having some ongoing conversations with that tax preparer, and I think Scott was going to handle some of this information.
So when you want to do a good job of planning your taxes for the year, these are just some of the things that you need to have available to make good planning decisions. Probably would want to start with the last item, which is that farmer's tax guide put out by Internal Revenue Service. It's called Publication 225. It does a really good job of explaining how farm income is taxed and how expenses can be treated. And so as you get ready to plan for your tax situation, that's a good reference to look at. But whenever you're doing that planning, you want to have your year-to-date income and expenses, a list of all capital asset purchases and sales, equipment, buildings, etc. Identify any significant changes you've made in the business, whether it's the timing of sales or the timing of expense purchases that may be different from prior years. The year-to-date financial statements, which would be a profit and loss statement as well as a balance sheet. And then what I like to have is last year's profit and loss for the fourth quarter, or for, what did I spend and take in an income from October to December of 2021 to kind of give me an idea of what 2022 may look like.
Yeah, and I would say related to that, it just seems like in agriculture, there's obviously some seasonality to it. And the first 3 quarters of the year, there may not be much activity, but it's maybe a lot of planning and a lot of transactions in that fourth quarter. But just kind of having those ongoing conversations with our tax preparer can help us prepare for that.
A lot of people are trying, if you're trying to minimize your farm profit from a tax standpoint, the people are often asking, well, what can I do to bring that income down? One thing I like to do is just pay the accrued interest on any outstanding loans, whether that's an operating loan or a term loan for a piece of equipment. You can usually pay the interest that's accrued since your last payment, sometime during December, and that interest would be counted as a 2022 expense for tax purposes. Again, it's not critical that you wait until December 30th to pay the most. If you can get it done sometime before Christmas, you're going to get most of the benefit for paying that accrued interest. But that doesn't cause any tax complications with what's considered a prepaid expense. So then the prepaid expenses, this is where it gets interesting. In order to legally deduct a prepaid expense, you have to be first a cash basis taxpayer, which most farmers are, and it needs to be an actual payment, not a deposit. In order for it to be an actual payment, you need to have an invoice that says you're receiving X quantity of some product, whether it's a herbicide or fertilizer or whatever, and that you're paying that bill now. Again, the purpose has to be for business reasons and not tax avoidance, and it cannot result in a material distortion of your income.
Yeah, and I was going to say, I've seen related to this, it's mentioned about, the business purpose could be that what the price is now, and you'd like to go ahead and lock in whatever that rate is, or you'd like to have it in storage so that you're ready to go at the beginning of next year. So a lot of times we do have a business purpose for doing that. But yeah, just a note there. And then the material distortion of income, I think it talks about, they kind of limit how much you are able to prepay. So that's kind of something that they limit already. And I think 98% or so of all farms are cash basis taxpayers, so that's not much of a concern either. But yeah, just being aware of the prepaid expenses.
Oh, so Kevin muted himself, so he's not muted this one.
Well, and they're
When you
starting to
start
cut.
doing prepaids, it's important to remember you cannot prepay more than 50% of all your other expenses for the year. And I think we have an example. We still have the example in there, Kevin, of what that looks like.
Yeah, I might should have included it on this slide, but
So here, if Bill has $30,000 of farm expense for 2022, the question would be, how much can he legally prepay and deduct in 2022? Without looking at what those farm expenses are, I would say it's going to be 15,000 because you can't prepay more than 50% of your deductible expenses. So did I get that one right, Kevin?
yeah, no, that's what I would say. And I would say, you know, there is a little bit of a, so if he did do that, then that 15,000 would apply to 2022. He would not be able to take that in 2020. He would apply 15,000 to this year, and whatever remaining prepaids that he had would apply to 2023. And so you can somewhat get in a cycle of this if you're always prepaying at the end of the year. You know, that's something that you're applying it to that current tax year instead of the next tax year. So, and I know that it mentioned one tax case where they said it was packing materials, that agrogel farming versus commissioner, and it wasn't feed, seed, or fertilizer, but they had paid for packing materials, something related to their marketing, and they in fact allowed them to deduct more than that for the given tax year because they said it was pretty narrowly applied. The way they looked at the tax law was for feed, seed, and fertilizer, and that was more of a marketing expense. So they did allow that in that instance. But if there are no exceptions, then you would deduct the additional prepaid amount in the following tax year, so 2023, for instance.
One other thing that can be useful, particularly from a cash flow standpoint, but can also impact your taxable situation, is the use of CCC loans. These are loans based on actual production that you can get from your FSA office. And the money that comes in can be treated either as an income, which would means it's taxable when you receive it, or as a loan, which would not be taxable in the year that you receive it. Now, granted, these loans aren't for the fair value of the crops today. For corn, for instance, you would only be able to get a CCC loan for $2.39 a bushel. For soybeans, $6.26 and wheat, $3.85. So that's less than half of the market value of those commodities right now. But nevertheless, you could get that money in, treat it as a loan, and then use those loan proceeds to help prepay expenses or to catch up on outstanding bills that you may have for 2022. If you're interested in doing a CCC loan, though, you need to apply as soon as you have that commodity in storage, because it does take sometimes a couple of weeks for those loans to be approved. So you wouldn't want to apply on December 30th and hope to get that money by December 31st. This is something that you do need to talk to your tax preparer about because it's an election. And once you choose to treat CCC loans as income, it's assumed you're going to do that each year forward. You can make another election to change, but it has to be done on the tax return for that particular year. So it's a good cash flow tool, and it can also help manage your tax liabilities. This one mine too, Kevin?
If you want to cover it briefly, and
Okay.
we've got about 5 or so minutes left, so we'll kind of speed through maybe some of these
Okay.
last few.
This one is oftentimes producers will deliver corn or a commodity to an end user and just assume that it's not going to be taxable income because they haven't been paid yet. But under the installment sale rules, you can defer it only if you have a bona fide arm's length contract with the buyer that states the payment will be received in the year following delivery of the grain. So a lot of people make the assumption that because I haven't been paid, I don't have to report it, but that's not the legal interpretation of how this is. You need to have that written contract that says you will not be paid until the following year. And to make it even more concrete, you should have, I'm sorry, you need that contract that says you need to have the contract before you actually deliver the grain to the buyer. And make sure that it specifies that you don't have right to any of those proceeds until 2023 or the following tax year. So this is just a lot more detail that you need to make sure you have in place. As far as crop insurance and federal disaster payments, generally you recognize those in the year of receipt. There are instances where a farmer can defer crop insurance proceeds if they can prove that they typically sold 50% or more of the crop in the year following production. So for instance, if you had an insurance claim on corn in 2022, but you typically carry corn over to the next year before you sell it, it might be a situation that will allow you to defer your crop insurance indemnities until the following year. But again, talk through that situation with your tax preparer and make sure you document. Bunching is generally referred back to how you do things on how you use your standard or itemized deductions. This is not something on your Schedule F, but rather on your the Schedule A on your 1040.
Yeah.
And there are some situations where it makes sense to maybe pay property taxes in January and then the following December, so you can bunch and have a bigger potential deduction rather than paying it every December and it being the same amount year after year.
Yeah, this is something that, because of the increase in the standard deduction back in the Tax Cuts and Jobs Act, a lot of people, I think over 90% now take the standard deduction. But if you knew you were going to have a significant amount of this itemized deduction, and you can bunch that into 1 year. So if you were going to do charitable, if you knew you were going to have some medical expenses and you were able to, and you had those tax deductions, state and local tax deductions, that is limited to 10,000 now, but if you were able to bunch those and they're greater than the standard deduction, then that may be something you want to look at in a given year. Chances are you would probably alternate because the standard deduction is so much more beneficial, but just something to be aware of there. And income averaging, I would say this is something that, so we talked a little bit about some of the income items and some of the expense items, but if in a given year you tried to manage that as best you could, but you ended up just having a really good year, and that's a good thing, we can use income averaging, which is something available to farmers and to fishers. It used to be available to all taxpayers, but I think sometime in the 80s, they started limiting this. And it allows us to kind of smooth out our income. And I'll just go more to this visual real quickly that does a pretty good job, I think, of explaining it. But this is from ruraltax.org. And, we talked earlier about maybe trying to utilize those lower income tax brackets. So let's say you could update the years to reflect 2022, but so this is a graphic from last year. let's say in the given year, we had a significant amount of income that we did not have in prior years. So it allows you to take that income, and they would call it electable farm income, and this comes from Schedule J. And you can kind of look at the form and the instructions and kind of how that's calculated, but it would allow you to take that. So in this case, I added these light blue boxes to kind of give more of a visual representation. Let's say we had 30,000 of income that we would like to income average over the past 3 years. You have to split it up evenly over the past 3 years, and you could apply 10,000 to 2018, 10,000 to 2019, and 10,000 to 2020. Again, this is the last year example, so just keep that in mind. But we do have to split it up evenly, but it allows us to use those tax brackets from those prior years that we may not have had income that bumped us up to that 22% tax bracket. So it's not a revision of the prior year's return. It's just a look back at some of those prior years to say, well, we still had a certain amount of income that would have qualified for that bracket that we are now using in a later year. So just kind of a visual representation of how that works. Again, we can't necessarily get into all the details of that, but just know, like, in a given year, if you did have a particularly high income year, income averaging is something available. And I know the IRS continually says this is something that's pretty underutilized in the agriculture community. So again, just wanted to mention that. This is not so much from a tax management standpoint, other than this is more of an administrative requirement that we have related to tax planning and what we need to do at year end. If in the course of your trade or business you paid someone $600 or more in rents or service for that year, then you must issue them a 1099. And the recipient has to get that by February 1st, and then the IRS requests their copy by March 1st. And sometimes, I mean, we do see a lot of situations where 1099s are issued in agriculture, and I think a lot of times, like, it'd be if you had a handshake agreement with someone to rent property, to rent land from them, maybe you paid it at the beginning of the year, you kind of went about your way and didn't think much about it. In that instance, we would want to issue a 1099, and it would show up on their tax return, and then it shows up on yours as an expense for the year. And so that's kind of, if you indicated rent expense on your tax return, then the IRS might follow up and kind of ask, were the 1099s issued? And in fact, that's one of the questions on the front of the Schedule F tax form is, did you make any payments that require a 1099, and did you in fact make those payments? So here's some pretty common situations where we see 1099s: crop insurance, government payments, rents. And for most of these, if you are receiving them, they're going to show up on the Schedule F. But for rents, that might be more of Schedule E. For if you had significant consulting or custom work, that might be more of a Schedule C business. But so we'll receive them, we report that as income, and then we're issuing them for things like rent. If you have someone that does custom work for you, veterinarians, if you have livestock, and veterinarians, it's kind of special how you treat those on the 1099. So something to be aware of, and that's kind of why I put a star there. And then like accounting and legal fees that we might pay are common reasons why we might issue 1099s. This is not necessarily all of the reasons we might have them. And with agriculture, if we are self-employed and we don't have salary or wages where taxes are being withheld during the year, then we may need to make estimated tax payments. There is a pretty helpful tool on the IRS website, the ITA, which will ask you a series of questions and will kind of help guide you and help you determine if estimated tax payments are something you need to be keeping up with. There is a exemption for agriculture that says if you have 2/3 of your income from farming, you can either make one estimated tax payment on January 15th, or you go ahead and calculate and file your return with any associated tax by March 1st, and you're not required to make the quarterly estimated tax payments like some other industries might be. So I think most people are somewhat familiar with that, but just wanted to mention it, and that the tax assistant can be pretty helpful too. And so that pretty much brings us to the end, but did want to mention most of this information for today. And if you heard something that you feel like might apply to you, then a lot of it just came from the Schedule F and the related instructions for that form. The Pub 225, the Farmer's Tax Guide that Scott mentioned, that is a very, very good publication. It goes through a lot of common situations, a lot of common questions in agriculture. The rural tax that we mentioned, and the Iowa State has a pretty good ag law blog that goes through a lot of tax information as well. So, and some further programs. We do have a farm tax workshop next Tuesday and a timber tax workshop. Those are geared a little bit more towards tax preparers, but someone that's very interested in this information or would like to learn more in-depth topics, you may be interested to check out those as well. So that's our contact information for Scott and myself. We do appreciate you logging in for today. I think we're just a couple minutes past time. I do apologize. They seem to be cutting trees outside my house right now, so if there's a little background noise, I think that's the issue. But I don't see any questions or anything come through. I do want to thank all of our presenters for today. We want to thank you for logging in with us. And next month will be November 16th from 12 to 1, and we will have another colleague from the agribusiness team. He'll be talking about a Southern Heritage Crops project, which looks at some of the historical crops in the state and maybe some projects going on with that. So we appreciate you logging in, and we hope to see you next month.